most people do directional trades. Most traders are share traders or CFD traders. Okay, so in my trade now, instead of using shares and CFD to trade, I now showing you what calls option substitute methods to replace your shares or CFDs in other things. Now, so let's say we take a look at our one of favorite, let's say we see Facebook. Okay, Facebook itself. Okay, now Facebook itself, it's nothing wrong with Facebook. Facebook just recently break a 52-week high. Okay, we just break a 52-week high, and we now have been stay above the for the last 3 trading days, stay above last trading days stay above 52 high. So yeah, the longer you stay above the 52 high, the more bullish, the more bullishness or more strong the bullishness is. Okay, now, so let's say now we continue say now today is Thursday. Okay, let's say presume the fact that by to Friday night, if you really want to confirm, now we're looking to take a positional swing trading. Objective exercise to hold a trade for 6 months, 9 months, 1 year. Like typical share trading. So,
trading for
at least positional. Positional means what? Or intra quarterly cycle. Depends what is your game plan or whatever.
Okay.
Now, in the world of trading, let's say now you enter a share, and now we just presume now is that if you have been 5 days, 5 days or 10 days bullishness above the 52-week high already. So if you stay there 5-10 days for 52 highs, definitely the longer you stay above 52-week high, the more powerful, the more bullish it is. Let's presume it's confirmed bullish already. Now, in the world of trading, let's say enter now at 315, which is the 315 now. The market price now is 313.09 cents. Let's say now we enter at 313. Presume that meet all our requirements already. Now, next thing, ask you a question. As a trader, what is a stop loss number? Correct.
Okay.
You cannot be like me like that, no stop loss, correct? So a stop loss can be based on what?
ATR.
Can be based on ATR, can be based on price action value, can be based on standard diligence, can based on standard deviation and things like that. So let me go and look something for you. Where is it?
ATR, PAB, standard deviation, and Bollinger Band.
And there's so many different variations.
Support, resistance.
Let me see. Here, we take one here.
Yes.
Here's the one here. We can see the ATR, we got simpler wireless and standard deviation. So we know for a fact standard deviations is about $10. But to be fair, if you go and use a standard deviation based on daily candles, do you think it's a good idea, bad idea?
Not a good idea.
Why? It's because you are basing on the average price movement at least 13. Based on the last 13 days, we take standard deviation, which is very popular. 13 days. So basically, you look at the last 13-day price based on one standard deviation per day basis. But in the world of trading, how long you want to hold a trade?
At least 3 months.
At least 3 months to 6 months cycle. So you cannot tell me on the basis of you are basing a trade basing on 1 day stop loss, correct? Now, so in the world of trading, if you want to do a trade for 3 to 6 months, let me follow my style of trading. The minimum level we're looking to do must be at least intra-month, 30 days low or 60 days low or 90 days low. Okay, now for learning purpose, why do I do this way? Okay, the immediate low will be what? 275. Of course, that's immediate low. Then if you want to talking about a quarterly what you call positional low, means that you're looking about 252 around here.
Yeah.
Around here, 252 level here. So technically speaking, you're looking about 3 months. Of course, if you look at 4 months low, it should be around 245 level. Okay, I repeat, if you're looking for a 3 or 4 months low, looking for 4 months low, it's about 242 level. Okay, so if not, the immediate low is what? About 275. You can see here lah. The next one should be somewhere between around 255 level. We got multiple levels, so we are using standard chart patterns to do it. And anyway, you know the daily price standard deviation for the last 13 days is about $10. And if let's say now use the 30 days low, is 275. 275 minus current price of 314. No, 314. Okay, 313 lah. 313 by 74 is about how much? At least the stop loss value must be how much? Enter long 313, stop out at 30 days low. Should be stop 30 days low is about 3275. So you're looking at about $38.
30 days will be how much? Immediate
Look like you can see
275,
can see so it's
25,
25 plus
30,
30, so it's 38 lah.
38, yeah.
So your immediate stop loss today, please don't tell me a $10 stop or $1 stop loss. You are timing, your stop loss must be a reflection of your duration of the trade. And to be fair, you went to a 6-month trade, you put a 30-day stop loss. To me, it's not a very good. To me, is you are very, I'll say, not suitable. So anyway, so now we got two choices: buy the shares, buy the shares at $31, $313. Cost you $31,000, $31,300. Then you go and put a stop loss, stop you up at 2755, which is logical. After all, 275 happens to be what? Technically, I said the immediate low, which happens to be what? Less than 2 weeks. How less than 2 weeks? You see, about 10 candles here, so about 2 weeks. 2 weeks low. So you want to hold a trade for how many weeks? How many months? 3 to 6 months. Okay. The choice of buying shares or CFD equivalent to $31,300. Then you put a cut loss at 275. Happens to be a 14 days low. So-called a 14 days.
10 days low.
So 7 days low. Of course, if you are doing more conservative, right, you want to do a 6 month trade, your stop loss must be at least a 3 months low. The 3 months low should be around 255. Or if you want to do a 6 months low in this case, the most powerful support level is at 242, 245 level. You can see here, 242 level, you can see here. One top, one mountain. The supporter is right over here. The next one is when September. The one before that is here. So we know for a fact that the most solid support now is at 242 level. So two tries. So we do. Of course, let's say for learning purpose, we are using the 14-day cycle low. When I say 14 days, 10 trading days is roughly equal to 14 days candles. Now, so now our stop loss is $38. So it means that you are prepared to lose $3,800. Oh, Thomas, I put $1 stop loss. If you put $1 stop loss, I
very fast eat up already.
You are not, because daily price action value or standard deviation now is 11, $9 based on wireless, 860 based on 5 days, 5 simple average, whatever it is. So next one we can do what? We can use what? We can use instead of buying $31,300 worth of shares, then put a stop loss of minus $38. You can always do what? Go and buy options equivalent. Thomas, yes, we don't relax a bit. When you do a trade, let's say now for learning purpose, you want to do a trade for quarterly. One quarter is roughly around 100 days, plus minus. So you can do here. Okay, look at 100 days, right? 100 days is here. How much cost you? 16th of July. 99 days away. So it's roughly now 100 days. Whatever I call intra-quarter cycles. Look at option pricing. Your stop loss is $38. Look carefully. The option, the straight call here is cost you how much? Cost you $21. $21.15. So you can buy one call here. How much it cost you? Cost you $2,115. This one, when you buy this one, automatically your maximum capital exposure is how much? $2,115. You can see how you know maximum loss. You can see here. Read carefully. Maximum loss is how much? $2,115. If you want to buy 100 shares, okay, or compared to shares now.
I think I write a table easier.
Whatever. Buy 100 shares.
Shares
will cost you what's the maximum loss? Officially, maximum loss is $31,443 based on current pre-market price. Okay, you want to buy options, cost you $21. Which one better? Up to you. You go and buy this, you go and spend this for your case. If your price is 313, your stop loss most probably should be around $38 level. So now you can do this way.
Mm.
So what is this method is what I call stop loss substitution method. Means that instead of buying shares and put a stop loss inside, you use a stop loss money and find option trades.
Mm.
Thomas, let's say now you want to do longer period. Let's say now you want to do 4 months long period. Can you buy now? You can buy 17th of September, 165 days away. Roughly should be around 5 months, 5.5 months cycle. Will
Okay.
cost you how much? $2,795. Okay, let's say now for maximizer, why don't we take January 2022? 888 days away. 1 month is 30 days. So we are looking about 9 months plus, 9.5 months. Let's see how much. Let's see how much option. A straight bullish call will sell you how much up? Will cost you how much? Just nice, $37.85. $37.75. So basically, for the stop loss money, you can buy and the money call bullish trade for January 2022, 288 days away, or roughly 9 months, 9.5 months away for the same value as your stop loss money. In any case, most important, look carefully. When you trade a shares, what is your profitability? It's unlimited. Okay, unlimited. What's the maximum loss? See, our cost of trade is what? $31,000. If you notice, buying power effect, which we don't count, is $9,000 over dollars.
Mm.
So if you what's buying power effect? Buying power effect in the way you see it's a margin. So you can hold a trade at $10,000 or $9,429, but your capital exposure still at $31,430. Okay. Okay. Now, if you go and choose your $37 call options. You see, what's the maximum loss? $3,750. You notice the profitability how much? Infinite profitability, which is the same as shares. You buy a shares, also got infinite. If Warren Buffett take over or Joshua take over at $5,000, you still have infinite profitability.
Profit side. Okay. So straight.
Okay, profitability. So which one better? Up to your discretion. But as an individual, unless you want to, the only time I buy the physical shares and hold forever is only what? If I buy for 5 years, 10 years, 15 years cycle. Whether is it retirement cycle or your children education fund cycle or your long-term investment cycle, if not, if you are doing short-term trade, Thomas, I want to make money now, 3 months, 6 months, 9 months make money, then it's always much better to do what? Do options. Why? You can see now, you have a maximum loss, how much it costs you? 3,775, which is what? Cheaper than your stop loss in the first place. And your stop loss is only 14 days low only, my friend. Okay, I'll be fair. Just gentlemen, look at stop loss. The stop loss. Your stop loss happens to be what? One can look at them for fun, look at 1, 2, 3, 4, 5, 6, 7, 8. 8 days, 8 trading days stop loss, mean less than 2 weeks, Your stop loss is based on less than 2 weeks price movement, Thomas, my stop loss is right over here. It's a $300 level. Excuse me. Then ask yourself, are you doing what type of trading are you doing? If you go and put a stop loss at 300, which is reasonable, for when you're putting a 3 days low, so you're telling me you're doing a what intra-month trade, do a 10 days trade. If you do a 10 days trade or 1 week trade, intra-week trade, 5-7 days or whatever it is, then you go and put a stop loss at if you think drop below 300, I will get out. That is logical because it's based on 3 candles. Correct. So if your stop loss is 3 candles, your duration of trade is when? 30 days? No. Maybe at intra-week or intra-fortnight. What is intra-week? Anything less than 8 calendar days. Intra-fortnight, 15 days. It means I'm looking about 10, 11 trading days. When I say, okay, now. Okay, now you please don't tell me that way, right? So this one, all you see here is actually based on what we call day candles. So your position or trade is how long? Ask yourself. Okay. So now instead of buying shares at 31,000, then put a 38, put a stop loss. It hit, the thing drop below $37. No, it drop below 275. I stop out. Nothing wrong. But remember, your 275 is 1, 2, 3, 4, 5, 6, 7. 7 trading days. Technically speaking, it's 1.5 week cycle. And as a trader, you want to hold a trade for 3 months, 6 months. Do you think you want to use a stop loss? Intra fortnight stop loss. So means that for you to do, Thomas, in this case, you are conservative. Why do you are what's that? You must, you want to do a 3 months, you want to do a 3 months trade, your stop loss must at least a 3 to 4 months stop loss value. So you can you can enter at a 242 level 242 level is well supported Why? They looking at 1 year chart patterns looking at 1 year chart patterns here. You can see 242 plus level is well supported. West Side Brother, he did one mountain, he did gap up, test here, reverse back, test one time, go 5 here, test one time, bounce back. So we know for a fact that in the bigger picture of some big 1 year chart patterns, the means about is 242 plus minus level. Okay, but okay. Anyway, now we take it as we are using intra fortnight support level, drop below 275 again. So it's that. So you understand the principle behind now. So options let you trade what? Trade with minimal capital exposure. What I mean by minimal capital exposure, when you buy a share, whatever you do, I don't care what you're doing, okay, it will cost you $557. Okay, the price, Thomas, why the price like that? Free learning. You can see the bid price now is 314.59. Ours is 315.97. You are looking at pre-market price. How? No. Can you see last X means what? Last done price means yesterday before market close. The last price is 313.09. So now off the cuff, you are looking have a opening move at least a $1 plus in the positive side, because the opening price now, the bid price is 314.67 compared to last done price of 313.09. Anyway, the projection now you are costing you, based on the what I have now, will cost you $31,557 capital. The buying power effect is 9,479 or $10,000, round up to 10. But if you go and buy an option for at a money option, call option for 21st January 2022, 9.5 months away, will cost you how much? $3,700. Which one better? That's why I say in the world of trading, I don't know why people you all love to do what? You all love to use buying power effect. Because Thomas, I can hold until I make money. Then you discover you lose more than you want to. Or some cases you put a $1, $2 stop loss and you stop yourself out, which is unnecessary. Anybody any questions? No. Because is there a better way? Of course it's a better way. But this is a stock share CFD conversion to option plus. So we keep it as simple substitution as much as possible.
Now,
Okay. So we are not talking about vertical spreads, diagonal spreads, sell puts, or buy sell puts, buy call, or sell call, buy puts, or sell call, sell puts. We are not doing that. We are keeping it simple. We are just doing straight call direction substitutes. If you cannot have a buy up, buy down, buy bullish, buy bearish, then all the 6 can handle one dimensional trading, either bullish up or bearish down. You think you handle 6 dimension trading.